Good morning, everybody. It's Thursday, March 27th, 5:25 a.m. Central Time. Grain markets are mixed to higher this morning. May corn futures up 1 at 452 and a quarter. May soybeans up 3 and a quarter at 1004 and a quarter. May Chicago wheat down a quarter cent at 535. May Kansas City wheat up 1 at 566. May spring wheat is up 3 at 588 and a quarter. The corn market sold off yesterday. Why don't we start there?
U.S. corn futures fell as traders anticipated the USDA to report a significant rise in corn acreage this year. The May 25 contract fell nearly 7 cents to settle near 451 per bushel. According to a Reuters poll, analysts are estimating this season's corn acres at 94.4 million, up 4.2% compared to 2024. Soybean futures were mostly unchanged on the day. Traders expect soybean acreage to total 83.8 million, down 3.8% from last season. Wheat futures faced pressure from a potential Black Sea ceasefire agreement, which caused the May 25 SRW contract to drop 8 cents, settling around 5.35 per bushel.
Okay, let's talk about the acreage expectation. We have a report on Monday. The planted acreage numbers are the big ticket headline items. The quarterly grain stocks could be just as consequential, if not more consequential. But in any case, the average trade guess for U.S. corn acres on Monday ahead of the report is 94.4 million. Remember that average trade guess, it's a poll of analysts. It's people like me who don't manage money. And I think that the opinion of those analysts may be slightly different than those who do manage money. What would be extremely interesting would be a poll of fund traders. Mr. Fund Trader, honestly, where do you think corn acreage is going to be on Monday? They won't tell you that. You'll never see that information. I feel as if there may be like a whisper type number out there, and it's not very quiet. But I think there's a lot of people looking for 96. I do. I'm one of those people. Not that I'm smart or not that I matter, but I feel like everything points to something higher than 94.4. Maybe it's not something you see printed on Monday. Maybe that's something you see printed in June. Maybe it's not something you ever see printed. But I feel like part of the reason that the corn market has sold off the way that it has the last couple of days is because of this maybe whisper type expectation for a higher corn acreage number and a drastically higher corn acreage number. You look at this May corn chart, you'd really like to avoid any sort of activity below this 446 trend line. That's been a trend line that's been in place and has been able to hold since the August lows. Looking at the soybean market, it hasn't acted very well, but it's been a little quieter the last couple of days. And maybe that's because if you end up with the whisper number in corn 96, it means that your soybean acreage is going to fall to like 82 or even 81. It could be very low. So the bean market hasn't acted well, but it's acted slightly better than corn here the last couple of days. The wheat market is just a dumpster fire. I mean, we had a rally last week and now it's sold off. And now I pulled a spring wheat chart this morning just for a change of pace. But you could post fresh lows in this thing today. I mean, you're only 10, 11 cents away. So the markets have all acted very poorly. Corn and wheat, the most poorly.
President Trump will impose a 25% tariff on all imported automobiles. The tariff, set to take effect on April 2nd, will be permanent and is expected to raise vehicle costs for consumers. According to Cars.com, half of all vehicles sold in the U.S. back in 2023 were imported. Auto Week reported that the tariff could raise vehicle prices by as much as $12,000 on certain models. Initially, Trump indicated he would avoid vehicle tariffs after U.S. automakers warned they would hurt their businesses. Also, on April 2nd, Trump will impose his sweeping reciprocal tariffs on all of America's trading partners.
The White House had a fact sheet about this on their website. They said, so the 25% tariff is on imports of automobiles and also certain automobile parts. They also said this: importers of automobiles under the USMCA agreement will be given the opportunity to certify their U.S. content and systems will be implemented such that the 25% tariff will only apply to the value of their non-U.S. content. I'm not sure exactly how that's going to work out. Where do we get our automobiles from? Mexico and Japan. Mexico is the top. We get most of our imported autos from Mexico and then Japan. And it's just coincidental that those are our biggest two corn buyers. I don't think necessarily that you're going to see retaliation as it relates to corn and imports. I don't foresee Mexico or Japan slapping tariffs on U.S. corn imports. But you know what? Crazier things have happened, and it's not a good look. Those two countries combined account for 52% of all U.S. corn export sales this year. So, you know, if Mexico were to come back with some sort of tariff on U.S. corn, the front loading program people, the people who pushed that narrative could still be right. They could still be right. For now, they're wrong though, I think.
Russian and Ukrainian agricultural exports are almost back to pre war levels. The robust shipments coincide with U.S. efforts to negotiate a Black Sea ceasefire, which Russia asserts must be contingent on sanctions relief. Even without the agreement, Russia and Ukraine have been able to dominate the global grain market. Despite ongoing attacks that have damaged infrastructure, Ukraine's Black Sea grain shipments are near pre-war levels. Meanwhile, Russia is on track to be the world's top wheat exporter for the eighth consecutive season, although its shipments have slowed slightly due to quotas, a strong ruble, and lower margins. If the ceasefire is achieved, it will likely lower shipping costs by reducing war related insurance premiums, making trade in the region more efficient.
I feel as if the narrative or some of these headlines would suggest to you that wheat exports and grain exports out of the Black Sea like fell off a cliff when the war started and they never came back. And that's just patently false. The war started in 2022, and we've really seen higher wheat exports out of the two countries combined since then. So there's this narrative that, oh my gosh, the war is going to end and now they're going to finally start shipping wheat. Guess what? They never stopped. In fact, they've been shipping more. So I don't know. I talked yesterday and I kind of joked about it, how like everything is bearish wheat. And I think this kind of goes along with that idea, but it just from a fundamental standpoint doesn't make a whole lot of sense to me. They've been shipping a lot of wheat during the war. They're going to continue to ship a lot of wheat unless they have a crop problem.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Shay Folk joined me yesterday. I kind of teased this one. Shay is sold up to APH with regard to his 2025 corn bushels, which is a crazy and outlandish notion for a lot of you guys. But he explained himself and talked about his strategies and why he's doing what he's doing. We also had kind of a second part to the video where we talked about seasonal target orders and how this is a practice that maybe you want to be involved in. We talked about some specific timeframes and some of the strategies that Shay likes to use. And actually, the way I do it's a little bit different, but I think that both ways are perhaps something that could work for you guys. If you want to see the premium content, go to standardgrain.com. You can sign up this morning. We send a ton of info out to our premium subscribers. You know, here on YouTube and on the podcast, we do a news show. The premium content is actionable advice with regard to grain marketing, your farm business, that sort of stuff. We talk for hours and hours and hours about marketing and strategies and crop insurance and all that sort of stuff, policy. I mean, if anything that really applies to you guys, we talk about on a daily basis. This is the only way that we do what we do. So if you want to support what we're doing here, the only thing that allows us to do to YouTube and the podcast is the premium subscriber. So if you're a premium subscriber, we absolutely love you to death, as you know. And if you're not, we would love you to check out the premium subscription. Give that deal a shot this morning, guys.
Nutrien expects the proposed Black Sea ceasefire agreement to have little impact. According to the Canadian fertilizer company, the deal is unlikely to significantly affect global fertilizer or grain supplies this year. Russian fertilizer exports have adjusted to wartime restrictions and are operating near full capacity. Meanwhile, Ukraine has maintained strong exports through alternative shipping routes. The agreement's future remains unclear due to Russia's extensive demands, which include lifting sanctions on major Russian banks.
Was it just yesterday we reported that the CF industry stock was down on the
Yep.
ceasefire talk?
Mhm.
Okay, so somebody with some money believes that maybe it'll have an impact, but you know, markets are fickle and there are knee-jerk reactions to every headline, and maybe that was one of them. But Nutrien seems to see that there's no major impact. I was kind of hoping maybe there would be an impact and it would bring down fertilizer prices, but Nutrien says no.
U.S. ethanol production declined last week. Weekly output of 1.05 million barrels per day was down 4.7% on the week and slightly down versus the same week last year. Ethanol stocks were pegged at 27.4 million barrels. The print was up 2.9% compared to the previous week and up 4.8% compared to the same week last year. Stocks remain at levels comparable to those seen during the early stages of COVID. According to Reuters data, U.S. ethanol production margins are hovering near break even, with the most profitable margins being reported in the Eastern Corn Belt.
Ethanol production is fine. It's good. I still think we may be a little bit ahead of the pace needed to hit USDA projections. The problem here is stocks. Why are ethanol stocks at COVID lockdown levels? I don't understand what's going on here. I don't know if we're exporting less. I don't know if we're using less. It's somewhere in the supply chain. If you guys have an insight into that, let me know. We talked about ethanol storage capacity and how we don't really know exactly what it is in the United States. We have a pretty good feel for what crude oil storage capacity is, as an example. But when it comes to ethanol, the data is not really very clear. So I don't know. I mean, if this stays the way that it is, you could maybe make an argument that ethanol production would ultimately be reduced, which would be a bad deal for corn prices.
JBS reported fourth quarter earnings on Wednesday that surpassed expectations. The world's largest meat packer posted earnings that were more than double the prior year and 9.4% higher than anticipated. Strong demand for chicken and pork drove earnings higher as consumers shifted toward more profitable alternatives to beef. JBS anticipates a more challenging year due to historically low U.S. cattle supplies, which have caused beef prices to soar to all-time highs. However, consumer demand for beef has remained surprisingly strong. Despite the strong quarterly results, JBS's shares fell as much as 4.8% yesterday. However, the stock has been able to surge nearly 90% over the last year.
Yeah, so JBS, it's traded on the Brazil B3 stock exchange. It posted fresh all-time highs just last week, had a huge week, and then we peeled back a little bit on these earnings. But I think JBS is going to do just fine. And apparently they're thriving in this sort of environment, which is interesting in itself. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 10 cents to 70 cents higher. Feeders saw gains ranging from 82 cents to $1.25, with the exception of the March contract, which lost a mere 17 cents. Box beef was higher once again. Choice was up 311 at 338.30, reaching its highest level for any March and the highest on record since 2021. Select was up 248 at 316.53.
Outside markets are pretty quiet. The Dow's up 100 points. The S&P's up 6. Bonds are off a little bit. U.S. dollar's about flat. Crude oil down 10 cents, and the June WTI at 69.11. Have a great day, guys. We'll be back on Friday.